The GDP growth has seen a consistent recovery. Government revenues have exceeded the targets by a wide margin till December. Exports have been buoyant. In the first 9 months, we have clocked $300 billion in exports. Interest rates have been at their ultra lows despite inflationary pressures. We've managed to scrape through 2021 with some success. But a dampener in this good news is now the entry of the third wave. The numbers are spiraling as we speak. With this backdrop, what are the factors that will determine the fate of 2022? Hello and welcome to The Print. I'm Shubham Batra, Senior Associate Editor at The Print. And with me is Professor Ila Patnaik, who has all the answers. Today's episode also coincides with the release of the first advance estimates of the GDP data for 2021-22, which is the current financial year. Those come out at 5:30 p.m. today. Ma'am, your column today talks about the new year bringing in both hope and caution. Before we deep dive into this, I want to start this conversation by asking you a bit about what is the current state of economy according to you in terms of its macroeconomic fundamentals?
The GDP is picking up, particularly because of very sharply because of the base effect, very sharply because of that. But not just that, we've already reached the pre-COVID numbers and in terms of levels, and we're picking up from there. We've seen an increase in business confidence that usually comes before an increase in consumer confidence. Because business confidence comes when businesses think that demand is going to increase, and with rising demand, they can now invest more so that their capacities will become fully utilized, and then they need further capacity. And then they start, investing and then hiring, and then consumer confidence comes later because people have to get jobs, their incomes have to go up, they have to feel that their incomes are more certain. So we're at this stage where, somewhere in transition. We've seen a pickup in business confidence, but we have yet to see a sustained pickup in consumer confidence. We've seen a little bit of an increase, but not enough to say that that's a sustained increase. So in this phase of the cycle, what we really want is that there should be less uncertainty. Unfortunately, because of the third wave and because of Omicron, even though we feel that it's not that it's as fatal, it's not as bad as the second wave yet, it is going to make us a bit cautious until it is out, until we know that, yes, it's going to, go away very fast, because that's what other countries are seeing, that it comes and within 4 to 6 weeks, everyone gets it because it's just so highly, highly infectious. But we have to see that. So the next 4 to 6 weeks of Omicron are going to be critical in determining how we feel. And if it does go away and it does improve business confidence, then I think we can hope that we are back on track.
You've spoken about 5 macroeconomic indicators, ma'am, and the first one is high economic growth in 2022-23. One of the ingredients that you've spoken about for higher economic growth is government's push for higher capital expenditure and push for infrastructure through a new institutional framework. I was going through the CGA numbers, and ma'am, till November, the government has reached only 50% of their targets so far. You think, have they overestimated their capacity to spend on infrastructure, given we're left with only 4 months and we still see private investment slackening?
You see, I think that we didn't anticipate how bad COVID is going to be and how long it is going to last. So a lot of plans were made, and we're still doing that. Actually, we're being optimistic. We are hoping that this is the last wave that is going to hit us, and that we, won't see a lot of disruption of economic activity. So one does tend to be a bit optimistic in that, in this setting. One hopes that it's not going to, if you were to say this is going to continue for 10 years, obviously all our projections, all our plans will change. So a lot of what is happening, I think what you may call over-optimism or lack of planning is also that's more like, this is what we're going to try. and let's see how much we can achieve. But this is ideally what we would like to achieve. So I think we'll fall short when the budget comes. We'll see this, that we'll fall short on a lot of things because of the fact that there was COVID and a lot of the expenditure plans couldn't go through. But
Hmm.
but if again, if the situation changes and if this is indeed the last wave, then hopefully things will pick up.
That's true, ma'am. But I was going through the RBI's monthly bulletin, and what they have stressed is that center and states should clearly bring out the fiscal glide path for the next financial year so that they can create fiscal buffers and that can be used for future economic shocks, if any. Now, with this limited fiscal space, can this infra push be sustained if indeed this is the last wave, even after this?
See, a lot of the infra push has to be privately financed. So
Hmm.
it's not as if it will all come out of entire spending has to come out of government spending. If you look at the plans in the total plan, only a part of it comes from the central government, a part of it comes from the states, and a part of it comes from the private sector. And
Hmm.
it could well happen that if finances are bad, then we see more of a shift towards the private sector. So, and institutional arrangements will have to be good, will have to be strong, and that will need to be done. But look at the tax numbers; they are looking good. I think
Hmm.
the difficulty with infrastructure investment is not as much money. The difficulty with infrastructure investment is land acquisition, for example. So it is getting the contracting right. It is who bears the risk. Is the
Hmm.
private sector, even if you do manage to give out a project, is the private sector willing to take the risk that comes, the kind of political risk that comes with it, that
Hmm.
you don't do land acquisition or a project gets delayed because it doesn't get a certain kind of clearance. Now, the model that we have is that we ask the private sector, that okay, this is what you're going to build, and now you go ahead and get all the clearances, and you go ahead and acquire land. That shifts the risk to the private sector. So
Hmm.
my sense is that, and this has been pointed out by government committee reports, so it's I'm not saying anything new, but the Kelkar committee, for example, had pointed this out, that what's happening is that because a lot of the risk has to be borne by the private sector,
Hmm.
it's not money that is the constraint in infra investment. It is, can we get the allocation of risk and the institutional and legal arrangements that needs, can we get that right so that the private sector is able to step in? And it's a these investments are very large. So when the
True.
investment is very large, for someone to take to do that investment, the risks needs to be small, because otherwise the losses are going to be very big.
True.
So I think that's where the challenge lies.
And I think, in fact, if I remember correctly, the economic survey has also spoken about the sanctity of the legal contracts. One of the things that you mentioned right now. Just to shift the focus a bit to one of the other things that you've spoken about is inflation. The central bank believes that the headline inflation will traverse through a hump before returning to the targeted level of 4%, probably by the end of the next financial year. What are these humps that we're likely to see in 2022? I mean, you've spoken about some of them in your piece today, but if you could just elaborate for the benefit of our audience.
So a part of, there are logistical issues, there are supply side issues, there are issues about containers and ports, there are issues about exports from China. In addition to that, I think imported inflation and the monetary policy and fiscal policy of advanced economies plays a big role in inflation at home in India. So if the US Fed has a very loose monetary policy, I mean, it is indicating that it's going to tighten, but so
Hmm.
far it has been quite a loose monetary policy, and inflation in the US has risen, to levels which we haven't seen for a very, very long time.
Yeah, about over 6%.
6%. And so if they continue, if they go slow on their tapering, and if at the same time their fiscal policy is expansionary, which has been the case. I mean, again, it's not that they are as affected by Omicron, and the current numbers in the US are very, very frightening. So we don't know whether fiscal policy will actually start contracting now or not. So if they have expansionary monetary and fiscal policies, that will impact their inflation and global inflation and push up demand for, push up prices of products by pushing up demand in the global economy. And, look at commodity prices, which have risen and which have led to domestic price increase here. So those are things that, we'll have to see through what happens before we can hope for lower inflation.
No, this actually is very well connected and brings me to the next point that you've spoken about, is about the volatility in the interest rates. I mean, that's another factor that you spoke about in your column today that will determine the economy's shape in the next financial year. Now, there is a catch-22 situation here. How does the central bank tighten monetary policy and rein in inflation without killing off the recovery that we have seen, or going forward, how they plan to support it?
Yeah, so it is again something that it's not as if there is high GDP growth and high inflation, and you can just tighten monetary policy and raise interest rates and pull down inflation. So the textbook answers don't work. You have a sort of stagflationary environment. Growth is picking up, yet a lot of it is the base effect. So, and there is uncertainty because of which growth may falter again, while at the same time you have inflation picking up. So if your standard, whenever your standard, monetary policy or textbook sort of stuff where everybody on the MPC agrees, wherever that doesn't happen, then you have a situation where, there are disagreements, and sometimes you'll go up, sometimes you'll go down because of lack of consensus. And sometimes you'll feel that, oh, inflation is so much that we need to rein it in. And then there will be forces at play, which will be like, no, you need to keep interest rates down because the economy still has to pick up, or you have to keep interest rates down because of being the debt manager of the government. And the government is having to pay a large, have a large interest burden on its borrowing. Will be interest rates down, while at the same time, the target of inflation, and in general, you want savers to find it attractive to save. Currently, you're offering negative interest rates to savers in India. If those who put money in savings account and or fixed deposits, currently they're getting negative interest rates. Very soon, that starts affecting household savings in bank deposits. And
Agreed. Yeah.
start moving to mutual funds, and then you have this problem of a lot of bubble building up in stock markets or in gold, housing, crypto, various of those assets that you don't control, whose prices you don't control. So it's not going to be a year where, oh, we know that, okay, we are going to keep increasing rates by 0.25 for the next 16 quarters. That's not going to be the case. It's going to be a year when there will be volatility, there'll be ups and downs, and very genuinely so, because there will be disagreements on what is the right policy.
Ma'am, but after the Fed indicated that they're going to increase rates thrice in 2022, I mean, we saw a bit of a hiccup here, but it hasn't really become entrenched in our financial markets yet. Ma'am, what is your sense on what are the factors that play here? I mean, if the Fed does increase their rates about 3 times this year, how will it affect our financial markets, and what sort of outflows that you expect, if at all?
So usually we find, like in the taper tantrum period, we found that foreign portfolio investors do a reallocation of their assets when interest rates in the US go up. There is a risk on, risk off scenario where higher interest rates in the US typically lead to money flowing out of emerging economies, And since India receives a lot of FPI flows, we would be one of those economies that would get affected. Now that happens in debt, where now there's a significant amount of money in debt, but they look at their entire portfolio, and there is also movement in equity flows, and so the overall situation where the Fed is going to taper is one which leads to higher volatility. So you would expect the VIX to go up, you would expect interest rates to go up and down, you would expect the currency, particularly the emerging economy currencies, including the rupee, to be more volatile than you would under a very normal sort of regime. So in this, that's what one would expect might happen.
And then, ma'am, connecting this particular bit, if the financial markets are choppy on one side, how should the government react specifically on the disinvestment front? Because in 2021, what we saw was that the first quarter, as it is, went by dealing with the second wave. After that, we started with a disinvestment process only, I think, by September or October, when the issues started coming out one after the other. In 2022, how do you think the government should approach their privatization or disinvestment drive as a whole? Because it is likely that the targets are going to remain high if the government's expecting a good revenue from disinvestment.
I think the focus of disinvestment should be that because it leads to better allocation of resources, from being resources, land and capital, human resources, being locked up in enterprises that are dysfunctional. So particularly in dysfunctional enterprises, loss-making enterprises, or even in the profit-making, sometimes the profit margins are much lower compared to the same or similar industries in the private sector. Then, because that should, I believe, be the focus, rather than the amount of money that you can raise. Therefore, I would say the government should continue its disinvestment process, because this disinvestment is actually going to improve the total productivity in the economy by improving resource allocation. So most people think of disinvestment or privatization as something to raise money. Oh, we are selling family jewels. Excuse me, not many of them are really jewels anymore. Okay, we keep pushing money into them and into them and into them year after year after year, and they keep making losses. So okay, don't sell the oil companies, don't sell the Navratans, but there are a lot of public sector companies that are no longer jewels, that are no longer in areas that are either strategic or that are creating public goods, that they're the private sector is already there, is doing a better job. Allow resources to be allocated better by privatizing them. And I think we should keep our eye on that objective, rather than treat the objective or treat it as, how much money can be raised. And that's why you don't look at stock markets, you don't look at that. Just month after month, make a bundle, keep disinvesting.
And then we have seen a start, ma'am, with Air India. The way it happened, nobody would have imagined that we'll be able to sell the airline with the debt burden that it had. The last thing, ma'am, before I throw the floor open to questions from some of these questions we've got while our live interaction is going on, the bit about caution that you have mentioned in your column, and this is towards the end where you speak about the bad loans in public sector banks, the banking system as a whole. Where are the downside risks? Can you give us a sort of outlook on how do you see banks performing in 2022?
So if the programs that helped sustain banks, or kick the can down the road, that is not declare their NPAs as NPAs, once all those go away, once banks have to actually recognize their losses, we might see the situation worsen. Also, because until now, many people have been able to either, because interest rates were very low and there was a lot of liquidity. And in fact, the borrowing by industry, large industry, had gone down because they were not seeing attractive investment projects. So there was a situation where you could perhaps evergreen a lot of your loans, where you didn't have to tell your bank that you can't pay back anymore. But that
Hmm.
situation is likely to change. Okay, one, large industry has started showing signs of a pickup in credit. So credit to large industry has started increasing. Uh, Second, because many of the government efforts to give relief in COVID are also going away. Fiscal capacity is limited, and the government can no longer afford to give those packages and relief packages.
Hmm.
Once all that goes away, and also the regulator starts turning its screws that okay, if you have NPAs, you have to declare them. So we might see bad loans of banks increase. And banks may become more cautious then.
Okay. Ma'am, we've got about 6 to 7 questions so far. The first one again is related to what we were talking about, uh, the health of the banking sector, but this is in the context of MSMEs. Suresh Kumar has asked a question on Twitter. He's asking, will the MSMEs perform well in 2022? Uh, he says another lockdown will be a disaster for them. What do you think the government should do to protect the interest of the MSMEs?
I think the MSMEs have had a very difficult time. Uh, mm, One, because in the process of formalization, uh, and when I say difficult time, let me clarify that I don't mean that it's something that should have been completely avoided.
Hmm.
Because if they were low productive enterprises, then eventually they can't compete, and they have to die out. What's happened in the last 3-4 years is that the low productive enterprises, uh, speed at which they would have perhaps collapsed has accelerated
Hmm.
because of GST, digitization, and COVID. And it's not all bad. I mean, so the better ones managed to survive, while the worst of the lot are dying faster than they would have died otherwise. What GST does is, you come into the formal sector, you pay your tax, otherwise you don't get input credit. So you can get input credit only when you come into the formal sector. And so many people who would have preferred to buy from an MSME might today buy from a formal company, simply because the formal company allows them the possibility of getting input credit if the MSME was trying to basically evade taxes. Because a
Hmm.
lot of what was happening in terms of unproductive ones. So, if you didn't have if you were not productive enough to be able to pay, say, an 18% GST
Yeah.
on the value added, then you will sooner or later slip away. That's happened because of GST. Then also partly because a lot of business has moved to digital, given that people are, because of lockdowns or fear of infection. So during this COVID period, that has also affected a lot of MSMEs. And third is the actual lockdowns, people not being able to come to work, the fall in demand. So that's the third very, very big element of something that's hit the entire economy and has hit MSMEs more because of their inability to be on digital platforms or formal platforms. So
Hmm.
all that together, MSMEs have had a very difficult time. Now, when you think about the way out, I don't think that there are, any quick answers to how we get MSMEs to do well. I mean, one of the answers that has traditionally been sought in India is that we tell our public sector banks, hey guys, you go and give 5%, 6%, whatever credit to MSMEs. And then they also, the way they give credit is also not based on your business idea or your proposition or your record, but more of collateral based credit. And that's really then money goes to the more capital intensive company, even among the small companies, than to those who would perhaps have created more jobs. So our traditional recipes haven't worked. Uh, we might need to think of 100 things on how to make it work. We need to think of reducing tax rates. We need to think of having a competitive banking sector that doesn't just lend on collateral, but looks at business loan. We need to think of how to promote our export of services. Maybe again, MSME don't necessarily have to export manufactured goods. It could be services as well. So we need to think of export of services. Do we need to get into agreements with other countries, trade agreements, trade deals with other countries or regions? There's a host of things that we need to think about if we want to change the environment for MSME growth. It's not just COVID and one, quick reaction in response to that.
Ma'am, the next question is related to inflation. A member of our YouTube channel, Kushal Jaisinghani, has sent this question. He's asked that, do you think US Fed printing more money is leading to inflation? Is it a classic case of too much money chasing too few goods? Basically, do you think inflation will increase in 2022?
So I have already discussed how it's fiscal and monetary expansion in the US and other advanced economies that has led to a higher demand for goods by households in advanced economies, pushing global prices up. Governments have also chosen to spend more. So he's just talking of the US Fed printing more money. I think he needs lower interest rates because now it's no longer about printing money, but it's about what interest rates you keep. But anyway, they've expanded the size of their balance sheet. The US balance sheet has Fed's balance sheet has expanded as well as it.
True.
And now they're talking of pulling it back. So that's one of the factors. But I think the fiscal expansion during COVID is certainly a factor. And it's not just a monetary expansion, but it is fiscal expansion as well. And what happens in 2022 to inflation will be determined by how fiscal and monetary policy in advanced economies particularly behaves.
Because the demand for goods definitely is coming back strongly, as we have seen in the last few months. And that is obviously getting entrenched. I think you had only spoken about in your previous shows of Economics, how the demand is becoming more entrenched. And that will also have a reflection on the inflation in 2022.
Right. So if transfer payments to US households continue, also greater spending on infrastructure by governments does push up commodity prices. So we have typically been following a strategy of increased demand, and that will somehow give higher incomes without focusing adequately on this is a time when supply is constrained. So when supply is constrained and you increase demand, you can actually, instead of getting an increase in quantities, you can get an increase in prices. And that's part of what has been happening.
Some of the things that we have spoken about, this question's related to that. His name's Soham Roy. He's again member of our YouTube channel. Ma'am, he's asking, what is the reason behind the mammoth FDI inflows into India over last 7 years?
I think India is a very attractive destination. Our domestic market is one of the biggest and fastest growing in the world, even despite all the problems that we Indians like to moan about. We are among the world's most attractive investment destinations. And, FDI goes where there is money to be made. So we've seen that happen.
And ma'am, do you expect any further liberalization in the FDI policy coming in the next financial year?
Let's see. I don't have any specific knowledge about this. I think liberalization in FDI is always a surprise. You think about insurance and the increases in the limits. I don't think we were expecting that. Most of us weren't. And
Hmm.
more interesting was that when it came, then where did all the hula baloo that used to happen earlier?
Hmm.
I'm sure you and I have discussed this when you were covering MOF and I was in MOF many
Yes,
times,
ma'am.
that what's going to happen, and then it didn't happen then, and then suddenly it happened, and when it happened nobody said anything at all. So
Yeah.
to me, a change in FDI policy as well as the reaction to it always is a surprise.
The last question that I have from one of the members of our YouTube channel, he's basically asking on the privatization of the two public sector banks that was announced in the budget last year. There we see some delay happening. I mean, I've also done stories around it. Uh, Ma'am, what is your sense? You think this is something that will go through? I mean, there is a push for privatization, but when it comes to bank, things get a little bit more tricky. Some people tend to believe that the nature of the public sector banks came into being for a certain reason, and financial inclusion is pushed through it. Uh, so the question essentially is that what is the future with privatization of public sector banks?
So, Shubham, I started writing in 2000, and I have been waiting since then for a government to at least say that they will privatize a couple of public sector banks. So I'm not surprised. I mean, thinking that it took about 20 years for a government to actually have the courage to say that they will privatize them, I don't really expect it to happen as soon as or in the year that they say that it will happen. I think some of these things are put out there, and when there is appetite, political appetite, and there's expected to be less opposition to it, then they go through more likely than otherwise. So, as we said, Air India, FDI insurance, things that were opposed, and then, quietly accepted. So I think
Hmm.
privatization of banks. So if there is a sense that there is going to be political opposition, particularly, after that whole farm laws fiasco.
Exactly. I mean, one of those, yeah, one tends to be skeptical after the farm laws, the acts were withdrawn
So,
by the government. So,
so I think the government might be more cautious than normal, but given the fact, I mean, I'm just happy that at least they've said that they have an intent to privatize them. It might take them some time, but to get a government to say that they will privatize them, it's taken a couple of decades. So I don't expect it to happen, like quickly and without consensus. I think there'll be
true, true, true.
consensus, but it'll happen sooner or later. These things have to happen.
I think we're running out of time, ma'am. These were all the questions that we had, some of those that I had, some of those that our members of the YouTube channel had. That's all we have for the show today. Thank you for joining us. Do keep watching our episodes and sending in your questions. We'll be back next week and wish you all a very, very happy new year. Thank you for watching.